All right, well, Tesla shares tumbling to new multi-week lows on troubles in China, now slowing China shipments and new price cuts in the region, spelling some caution for the year ahead. For more on this, we want to bring in Dan Levy. He is at Barclays, a senior autos analyst. Dan, it's great to see you again. So we've seen the reaction obviously play out in shares over the last 2 days. Concerns about what we're seeing demand-wise in China. Is some of this a bit overdone, or what do you think?
Yeah, thank you, Sean, Brad, for having me. Look, I think what we're seeing playing out is the broader theme that we've been talking about into the year, which is that this is really a year about pivoting from supply constraints to demand constraints. And you're seeing that playing out in the EV market, where, and this is something we've been seeing in the back half of last year, especially, where you're seeing some questions on demand. What's the sustainable pace of volume? Look, the February data for Tesla in China was probably impacted by Chinese New Year. So, we don't want to focus too much into that, but we are below consensus on first quarter deliveries, roughly 450,000 units. And, look, in addition to, the dynamics around Chinese New Year, you have some slowdown in Fremont related to the refresh of Model 3. You have some issues with Berlin production around Red Sea delays. And just broadly, they're sitting on a lot of inventory. And so this, I think, underpins our more conservative view versus consensus deliveries. In 2024, we're at roughly 2 million. Consensus is 2.1 million. Just think that there's going to be some challenges on meeting some of the consensus numbers.
Dan, we had continued to monitor, at least for, I want to say, a couple years now, a shift in sentiment from some of the consumers within the region towards other homegrown brands, and perhaps why BYD has been able to see their own successes within the region skyrocket and move past Tesla even. How much of it is tied back to that mindset as well?
Listen, I think this is a key theme in the auto industry. It's the rise of BYD and some of the other domestic Chinese that have really figured out the cost dynamics. Tesla has actually fared okay in China. They've generally maintained in the BEV market, call it high single digit, low double digit market share, which is very respectable. It is obviously below where BYD is, where they've been pacing lately at roughly a quarter of the market. So I think there is still room for Tesla to grow volumes, even with BYD doing well. But it is a reminder that, of the regions where Tesla's competing, Europe, US, China is by far going to be the most competitive and the most intense. We've seen some price cuts lately, and that's where it's a bit trickier for Tesla versus other regions.
Dan, have we still not seen the worst for Tesla when it comes to the pricing wars and the pressure that will likely put on stock?
Well, there's probably more price cuts coming. This is what we're including in our model. Our view is that, probably continues for at least the first half of the year. We actually have pricing flattening out in the back half of the year. I would say one thing that you've seen change a little bit with Tesla is that, as opposed to last year, where there were sort of more open and wide price cuts from them, what we've seen really in the last, call it 6 months, is more, I would call it, discrete discounting, other forms of discounting. I think in the US, some of the large price cuts that they did last year were maybe not as stimulative of demand. This is why, they're constantly facing this question of elasticity of demand, because the price cuts really hadn't driven the type of volume that they maybe hoped for. And I think where you're maybe seeing a little bit of a pivot is holding the line a little more on pricing, rather than the approach last year, which was all we care about is volume. Remember the comment from Elon a year ago that we could theoretically sell cars at no profit? And that view has changed, that, they're clearly being a little more sensitive around the margin line.
Dan, thanks so much for taking the time here today, breaking down some of the key themes that investors are tracking around Tesla and the broader EV landscape. Dan Levy, who is the Barclays Senior Autos Analyst. Appreciate the time.
Great. Thank you so much, Brad and Shauna.